And Doc here from North America. Good morning, good afternoon, and good evening. And it is TGIF. Thank goodness it's Friday. So let's see what's going on here. You can see the Swiss. They're showing it to be moving down. You can see that there. It's been going on. You can see we've kind of hit the low end of the range here. I'm a little surprised about that so fast, but that's the way it rolls. Just follow the math. And over here, you can see for a second day, the actual Swiss has been moving back up. You see right there, we are piercing the zero line, and we are in the weekly buy. So our hopes and dreams of seeing this thing follow to the bottom end of the range don't seem to be there, as much as there's a lot of excitement about interest rates. And as you know, yesterday, Bank of England came out, thank goodness, an adult in the room, and raised the rates again. And that's the way it's supposed to be. Inflation, I don't think it's here to stay for a long time like it did back in the 70s and, topping out when Ronald Reagan became president and then going down. But it took a while to get rid of it. But with this electronic, back in those days, it took 5 days for a check to clear. When you wrote a check from one person to another, it took 5 days for it to clear. Now it clears in a matter of seconds. When you move money over to one person to another, and banks itself, 24-hour clearing, and sometimes they may hold it for a day or something like that. There's a bunch of different odd things that go on, but in the end result is it's nowhere near the speed to which the banking system functions, and now the way it functions compared to what we had with that super inflation back in the 70s was more of government policy than it was of a kind of a supply demand situation. And we're having the same thing now. It's more of government policies that are interrupting supply and demand than it is the actual lack of production of something. There's no doubt we have issues because of this extreme alert for this flu that we've had now for almost 2 years. They call the COVID, but in the end result, it's still flu. And so, people are going to get used to living around it. People don't die as much as they say. The numbers are coming out dramatically. In other words, anything I say now, if I said it 9 months ago, people would be totally nuts. But now they say lockdowns don't really work. They have not proven to work, and masks don't really work unless you're using some type of space age type of mask, and almost nobody does that. And then they say that cloth masks are basically a psychological factor. So there's a lot of interesting things going on here when we look at our economies across the planet. And without a doubt, we see that the metals complex just doesn't exactly honor the idea that inflation is here to stay. It's obviously, laughing at it. And so you can see here the Swiss, which is a good example of how the dollar is functioning. You can see it's moving up. You see that strength there. And that's the little bounce that's going on. You can see we're doing it there. We did see some real hot movement in the euro, which is pretty impressive. We've had some economic, or not economics, but some what do you call it, fundamental data that came out over the last couple of days. Facebook, the world's largest form of communications, evaporated, lost about 25% of its value. Things are slowing down when it comes to, there's competition slowly mutating. You can't have this, you just don't, AT&T only lasted a certain amount of time where it had control of all of the telecommunications in the United States. And now, it's just another little runt of the litter, basically. It only lasts so long, and to actually think that Facebook is going to be the form of communications across the planet for the next, 5, 10, or 15 years is kind of doubtful. I can't even imagine that. But, in the end result is that the stock got clocked yesterday, and I think they're kind of flattish today. They're not really picking it up. Last night, Amazon lifted. We're seeing a lot of different cross currents of reality, I guess you could say, physical reality. And, it just keeps on dancing along there. We'll keep on watching, keep on trading, and keep on seeing. Hey, how you doing there, Marcelo? I say we need wear astronaut suits to prevent COVID. I'll tell you the truth, I don't think that even works. I don't even think an astronaut suit will do it. So, you know, for a long time, you know, uh, I have a strong science background, and you know, for a long time, they thought that the common cold and flu moved much faster than the ability for people to infect each other. You know, and they've basically, that's the last I've heard over the last couple decades, is that it's been very confusing, especially, you know, going back into the 70s. They used to say, how do you have a report of, like, you know, 8 or 9,000 cases of the common flu uh, in a matter of days, when that many people don't meet each other physically, you know? And there was really serious talk for a long time that they thought it might come in through the atmosphere. So it might be literally a space virus more than it is a earthly virus. And then, you know, we infect each other from it after we've caught it coming in through the atmosphere. And this is, I'm dead serious. This was, you know, very strong in biophysics and biosciences, because the contagion rate was very, very extreme for you know, very high for you know, the whole process. And so, you know, you fast forward to this extreme flu we have now, they call it COVID. And, you know, it was engineered and it was modified over in outside the United States and in China. And, you know, there is a question mark all the time of the infection rates, and not even sure if a spacesuit might really do it. It really, you would think so, though. You know, I mean, you know, but yeah, it was a very strong thing. I saw that in you know, some responsible forms of you know, science communications throughout the decades, basically back in the 70s. You know, you can, you know, just to stay on this tune a little bit, you know, you have to wonder, when the Spanish flu hit in what was it, 1818 or 1816 or whatever it was, right around then, the majority of doctors and in that era didn't understand germs. So in other words, they were doing they were doing medicine, and they weren't doing antiseptic, and they weren't cleaning up. In other words, you know, they were just like, you know, eating a ham sandwich and doing dissection, you know, and doing surgery at the same time. You know, it was that crude. So you have to imagine that the Spanish flu probably had more weight to it. In other words, it was able to expand and kill so many. Nowhere, yeah, I mean, COVID is not even close to the Spanish flu. I mean, I think they lost 12% of the population of the Earth with the Spanish flu, something like that. It was a big number, and COVID has only taken out less than 1%. And so germs weren't even were people didn't even understand the germs back then. You know, it was invisible to them. They didn't have the technology or the ability. So there's a lot of mechanical things, you know, physical mechanical things that go on in sciences throughout the decades and centuries. And, you know, and here we are, you know, we're protecting ourselves extremely aggressive. And now all the studies after a year and a half, 2 years, is showing that we pretty much have it all wrong, which is amazing. So the worst Spanish flu virus arrived in America in 1492. 1492? You're talking about Columbus? Columbus didn't really arrive in America. He landed in the Caribbean. It wasn't until I think the Vikings were here first, and then from there it was Jamestown, I guess you could say. But Columbus, I think he was like in South America. He was like in the Caribbean. That's why they call it the West Indies. He thought he was trying to sail to West Indies. Yo, 47, TGIF. So let's see what let's see one of my favorite pairs trades that I don't watch. I like it though. Whenever I get a chance to tune it in, I tune it in. It's the Gbp Jpy. I find that to be very consistent. Here it is right there on Chicago Quant. We're still in that buy since the last time you looked at it. Look at that. Coming off a little bit today. And the weekly is still flirting. Is it flirting with it? It's right on the edge, isn't it? Look at it. Oh, no, look at it. It's plus again. We can get rid of that for the moment. It's plus. So, yeah, Marcella, yeah, the Caribbean. So I think the Vikings were here from the continent first, in this last, when I say first, the last, off from the last ice age, basically. So that would be like, I'm talking about foreigners coming in. I know the Indians, the indigenous people that were here, now, or, have been here for a while, came in from South America, like a couple thousand years ago as the temperatures rose on the planet. And so, it's, they were here for a couple thousand years. They're still here now. And then you have, now you have the Europeans really here, running away from King James, I guess it is. It's always finds me really funny that how that all plays out. So the Pilgrims, right? I live in the second oldest settlement of the New World. That's Gloucester, southern New Jersey area, Philadelphia. Then the Pilgrims came in a couple years later up to Plymouth Rock. So, yeah, the Caribbean. All right, so what else we got going on there? So you can see there, Gbp Jpy looking very firm, very firm. And I'm really impressed that they raised the rates. Let's see how the dollar GBP looks real quick. And you can see that it's backing off a little bit. Looks like it was flirting with the weekly sell, and it's doing the same thing. It's coming back out of it. What else we got going on here? Let's see what it looks like on J4X. Where's that at? Right there. So, oh yeah, look at that. It's doing a little topping out gig thing there, a little pressure just like we're seeing here in the Chicago. Let me recycle that a little bit. Oop, not that. That's not it. Let's do that again. There we are. And then we'll just spread it over like that. You can see it's doing that nice little curve like we're doing right here on J4X, doing that nice little curve. But we're not really breaking down that much yet. We're just breaking across the time manifold. You can see in the blue and the red. Ooh, what we got here? So all currencies are positioning ahead of NFP, yeah, and weekend take profits. I guess, I don't know. We'll see what they do. I mean, I think the markets are just going to, when it comes to the currencies, I think they're just going to drift around still inside their channel, because I think Britain is showing that sooner or later, even, the ECB, Christine Lagarde came out yesterday and said, we may have to consider raising rates or doing something, but it has to be unanimous. I don't know, something like that. So, I mean, they don't, they're not really doing a lot of fundamental stuff here. When it comes to the dollar and so forth, the dollar has been sold off the last couple of days pretty hard, relatively to the channel. But overall, the dollar has been very strong for a long time, and all the currencies have been consistent for a couple of years now. They stay in their ranges. So there's not, there's just a lot of good intraday trading type of stuff more, and good little positioning trading, and you play the range. You see it like here in J4X. Runs up the top of the range and then backs off and goes down and goes back up again. Does things like that. You can see it here on the Chicago Quant. We even have it Fibonacci'd. So we can contract this a little bit. No, not that way, the other way. There's the range, the two black lines. And all we do is run up to the 50 percentile and then kind of fall back down to the low end of the range. And when you scroll over the months upon months and the years, it's just staying inside the range. That's all they do. You just follow the Fibonacci basically on it. And that's pretty much the best way to trade. And I think I was talking about it yesterday about using binaries and options, and and marrying them to the hard delta or the spot itself, and it's pretty easy to trade ranges that way. And you're low risk, and large reward, really. And that's the name of the game, really, in the end. What else can we say about all that? I guess that's about it. Let's jump over to, and anybody wants to throw anything out there, be my guest. Throw it out there. We'll go. There are no stupid questions. There are no dumb questions. There are no foolish questions. There are no brilliant questions when it comes to the markets. They're just long answers or short answers. That's it. Because it's money. Money, money, money. And that's why you're here. You want to make money. Money. All right. Let's see. What do we got here? Let's go take a look at the euro. See how the euro is looking here this morning. And you can see there, maybe there's hope and dreams that Christine Lagarde has pushed that, up more. Oh, what's Marcel says, Doc, from a 200 ticks chart, those are huge movements. I bet. Let's take a look at it. We'll put it into our work. You'll be able to see. I agree. Yeah, there's some great action. Like I said, there's some really great intraday action. You can do all kinds of wonderful things. You see, there's a euro, and that's almost that's a 2.5 Tesla, is it? It's like 2.5 Tesla. But we can put 200 ticks in there and just check it out. Right there. Let's just do that. Yeah, you can see the range. I mean, it's there's 114.40, no more that at the European Open, and now it's trading at 14.80. 40 pips. That's pretty cool. And let's see what a 200 tick looks like. Let's see, 200 ticks. Usually I like to do the 1 Tesla. But let's see what 200 ticks looks like. There you go. As you can see there, let's see, it's shrunk down somewhat, but let's take a look at that. There's the European Open, and you can see it was trading in, okay, so let's scrunch this up a little bit too, so you can see a lot better of the picture. Yeah, so there's like almost midnight. Move that over a little bit like that. You can see, when she said that, you can see when she spoke that yesterday morning, here's yesterday morning, it was trading at, before Christine Lagarde and the Bank of England raised their rates, before she spoke, the product was trading in the 112.80 area, right? And then she spoke, and it automatically ran to 114 in a matter of 2 hours. So 200 plus handles, or 150 handles, basically. So, pretty much her speaking, by the end of midnight last night, U.S. time, from 7:30 in the morning a.m. to midnight, the product almost moved 200 pips. Yeah, there's no doubt that's a lot of action for that product. We haven't seen good action like that in a while. And you can see here, this is our 200 pip, and it's okay. You go into a sell right there, it goes down in value, and you go into a buy right there, and it goes up in value. It goes into a buy here, it goes up in value, goes into a sell here, it goes down and sideways basically until it goes into the buy right there, and it goes up in value. So 200 tick is interesting. I myself like the, I think it's a little bit smoother. I mean, you can get really, when we used to do webinars years ago here, we used to go with something like I think it was the 93. We used to use a very small Tesla. I mean, talk about riding the wild pony. There, it goes into a sell here, you catch that action there, and then goes into a buy right there, and you catch the action there, and it goes into a sell right here, and you catch the action down there, and then it goes into the buy right here. It's a good trading tool when it's that active. Very good stuff here, That's why at one time we used to have a camera on like the euro, and it was very active, and you could use our mathematics to trade it, in a short-term intraday period. It was fun times. Let's see. Now the bandwidth with OBS is a little different. It makes it a lot challenging to do too many things at once. So I don't really go with the camera at all because it sucks up too much bandwidth. Now let's jump back over where we were at. We were looking at euro on a daily basis right there. You can see it's going up to the 50%. Whoa, I didn't even touch that. So you can see there it's moving up to the 50 percentile, which we haven't seen since November. It was riding that 50 percentile right there for a long while. Let's scrunch this up. And it tried to go to the top of the range, and it did. It bounced along the top of the range there back last year in the spring. Played with the top of the range, played with it a lot, and then rolled over. And went back down to the bottom of the range back in 2019. It was that type of thing. They like to stay inside the range pretty much. That's what it comes down to. Now, if anything, I would think that the ranges would shift a little bit, but it hasn't so far. Let's see, Doc. I'm very technical trader. For me, bonds, technical concepts are hard to understand. Yields, coupon, face values, etc. If you can talk about that a little bit, would you be? Oh, I'd love to. I've talked about that here too. I always say that, boy, you want to, if you were 21 years old, well, hell, you could be whatever age now. But anyway, if you were a young guy, and I said, and you were looking to get into trading, I would tell them first go to bonds and then go to currencies. And then everything else is a far second and third. I guess oil would be third, but bonds are the Wild West of trading still. So in other words, out of all the things, in other words, they've really put a harness on currency trading, but they've put stock trading basically in a straitjacket. I mean, it's chained in a straitjacket for stocks, and then bonds are still the Wild West. Now, what happens with bonds? Let's go over to. Let me just show you a good example of it. Here is. Let's see where we go here. Let's go to. We're going to throw. First, we're going to throw it up on J4X too. So we're going to throw up a bond, the 30-year bond, in J4X. Let's see, where are you? U.S. Treasurer. Boon, there's the boon, and there's the bond. Okay, so there's the bond. All right, now let's put it up on Chicago Quant, and I'm going to show you what we're talking about here. Why it is the Wild West, and it's a great profit center for bond traders. This is the 30-year bond. This expires going into the second week of March, or just about the beginning of the first week. It's like the 9th or the 10th or something like that of March. Now, what happens is that what they do is this takes a delivery of about 8 or 9 different maturities. Okay, they're 30-year bonds that have been floated by the U.S. Treasury, and they usually choose about 7, 8, or 9 of them that you have to buy to deliver the futures contract. Like you buy oil, you have physical oil, and when you exercise your oil contract, you get barrels of oil. 5,000 barrels of oil. And so bonds are not listed the way stocks and currencies and futures, they're all listed. Now, currencies are a little bit freer, and they're like I said, they're like the second best thing to trade. But bonds, they're an over-the-counter market, and they really try to hide the bid and offer really well, and the government, the Securities Exchange Commission and all, can't do much about it because it's truly a Wild West of assets being traded. So in other words, you can't go to like the New York Stock Exchange used to be. The New York Exchange was a bond exchange first. Then they started trading stocks, and then they did both. But the bulk of trading throughout the last couple thousand years was bonds. And let me repeat that, the last couple thousand years. So if you were a king or a queen or a duke or an earl, or you were some type of part of the royalty system, a lord or something like that, they allowed you to trade bonds between yourselves, and it was a very over-the-counter market since its existence, I guess. And so in the bond market, now let's fast forward to this morning. bonds, you go into the bond trading, and you try to buy, let's say you own some government bonds and they're 30-year. You want to sell them. Well, it's a pretty clear market out there where the yield is. It's a little slippage in there, but there's a lot more slippage in there than other products. You can go see the futures contract right there that we have up on the screen. It shows you where the contract is. You see it over on J4X, 155.08 at 155.13. It trades in America. We trade it all the way up into 64ths. We do it in fractions still. It has not become a decimal product. So in other words, you see there is 11/30 seconds trading. That's the high today. The bid is 155 and 3/30 seconds offered at 4/30 seconds. So it's a pretty tight market. And it can get to 64ths. They will, sometimes even split it even more. So now, let's explain that a little bit deeper. A lot of the trading goes by phone. They use Bloomberg. Bloomberg's that's what one of Bloomberg's successes is. The Bloomberg terminal shows a lot of markets, and Thomson used to be very competitive in it, and then Reuters bought Thomson, or they merged, or maybe it was Thomson bought Reuters, one of the above, and then and so you have Bloomberg and you have a few others. But what happens is that when you're a customer, say to just name a brokerage house like a Merrill Lynch or a Swiss bank, most of the bond trading that goes on is between clients and the brokers. So in other words, the broker, if you bought bonds through your Swiss bank, chances are that when you go to sell your bonds through your Swiss bank, they go to their bond desk and they go and look to see if they can find somebody that will buy your bond. Now, you're not always dealing with a March, 30-year bond. You might be dealing with a 10-year bond or a 5-year bond or a 2-year bond. And they're not, it's not as easy to price discovery of the yield. So, especially if it's a corporate bond, like a Ford bond or a, BMW bond or a Volkswagen bond or a, British Aerospace bond, or a General Electric bond, or a IBM bond, or it goes on and on and on. The Royal Dutch Shell bond. So it's a real wild environment. Let's see. Oh, okay. So if I buy a 30-year bond, will it be dead by the expiration date? Yes. The group of maturities that you can deliver are pretty much within that two month or 1 month or something like that. And so after 29 years and 11 months or 10 months, all of a sudden it becomes mature enough to deliver those bonds, and then you deal with them. They will expire and they will hand you your money. That's how that works exactly. Now, Marcel says now is Refinitiv. Reuters is now Refinitiv. Oh, okay. And they have, Thomson used to be a really good information source and used to advertise, or not advertise, but used to disseminate some bond transactions, and Bloomberg still does. So, but the real Wild West is between the broker. So there's three parties. In other words, if you go to buy a stock through your brokerage house, pretty much it's pretty much you against the open market, and it's listed and you can see it and it gets executed. And the brokerage house basically just pushes it through, takes a little teeny commission if they charge you at all, and that's it. But when it comes to bonds, what happens is that a lot of times, because there's so many bonds on the planet, that's the number one debt in the world is bonds. And so what happens is that you call your bank, your brokerage house, whatever it is, be it Swiss Bank or Merrill Lynch or Nomura or whoever it is, Deutsche Bank, whoever it is, and you go to try to transact. What happens? The bond desk goes, okay, he's trying to sell his General Motor bonds, or he's trying to sell his Volkswagen bonds. And what they do is they get on a phone and they call a couple people they know that own them or sell them or buy them. And what they do is they actually buy the bonds from them, and then they sell them to you, or they do it as a markup. And so there's a lot of money being made in bond trading, as a broker or as as a participant in the brokerage side of it. That's why I say, if there's anywhere left to go for brokerage, that's the place to go. Bonds. There's a lot of, they step on, we used to call it, you step on it. In other words, you step in between. Let's see. I cannot do it online like currencies. Yeah, right, exactly. Exactly. It's the Wild West. That's what I'm saying. Yeah. I mean, there might be a bond or two that's listed that you can trade, but there are millions of them, of different bonds, not just of bonds, where there are billions and trillions of them, but there is millions of different bonds out there. Companies float bonds like all the time. I mean, like every quarter they're selling bonds. The treasurer of a corporation is selling bonds and closing out older bonds. And so it's a Wild West. So you can't, they're not going to allow it. And the most magnificent part of it all is that the Securities Exchange Commission can't really do anything about it. None of the government authorities can. The biggest market in the world, they can't do anything about it. Not a thing. And so it's a real, so in other words, if you're a young guy or gal and you're interested in being a broker, go to the bond market. Bond market's where it's at. Big money's made there. I worked with a hedge fund, and and when I would show up in the office, I would sit with the bond guys. Oh my God, I can't use the word criminal, but there would be times where they would do an in-between. They would step on something and make a $25,000 or $35,000 commission out of nowhere. I mean, it was not that, it happened all the time. And they would look at each other and they would say, to the two bond guys would go, "Don't you feel guilty?" And the other one would say, "No." This was in Connecticut. So I'm telling you, there's no controlling that market. They tried. They've created the futures contracts, which helps out with the big government bonds. But, I mean, it's like the commission some days, It was incredible. Just incredible. And they would look at each other and they would say, "Do you feel guilty?" And they would do that literally 4 or 5 times, no, 3 or 4 times a week. "Do you feel guilty after that trade?" No. Because they know that they were stepping on them really bad. So in other words, some customer would call and say, "We need to get rid of this particular bond." And then they would go and hunt down people who would like to buy those bonds. Then they would find out what those people would buy the bonds for. And then they would buy the bonds that the customer that wanted to sell them. So they would buy the bonds from them and then sell them to the other group that would like to buy them. And so they would step in between. Not only would they get a commission, they would take a little taste. They would take a little slice out of it at the same time. And there is no stopping that. None whatsoever. Because it's an over-the-counter market. There is no literally audit trail to it. The audit trail is almost non-existent. That's why. Anyway, that's the bond market. And that's how we have on the planet right now some crazy number like 14.5, 15 trillion, not million, not billion, but trillion invested in bonds that actually lose money the moment you buy them. A guaranteed loss. And you got to figure, how can that go on? Well, central banks allow it. The governments allow it. They love it. They're borrowing money at zero. Not only are they borrowing it, you would think that those guys and gals every day would look at each other and feel like they have to feel really guilty. They sell you a bond, right? And you don't pay, and you don't have to pay them interest at the same time. So in other words, you come to me and you go, "I want to buy a bond." And I go, "Okay, good. You're going to pay me interest." And they do it. There's 14 some odd trillion dollars in it. Oh my God. And talk about, I mean, that's why I do the webinar. It's the fact of talking about physical reality. No one can contest that. Not at all. Not even close. They can't go, Doc's being ridiculous. He's making a joke. It's like, no, it's a reality. It is a reality. All right, right. Where do we go from there? Where do we go from there? Where to go? Where to go? Where to go? All right. Let's see. Where were we? Oh, we were looking at the bonds. Okay, so let's go back to where were we? We were looking at the euro, right? Yeah, and the euro is making that nice move up. From the euro, we go over to the Turkish lira. Let's see what the Turkish lira is up to this morning. I saw it's daily buy for 2 days now. That's pretty cool. It's starting to lift up a little bit. Let's see. Let's first look at the dollar Turkish lira right there. Yeah, see dollar Turkish lira is also, you see three green hinkies there. See them right there? Right there. See the line moving up. And then let's put it up over on Chicago Quant. Where are you? Right there, there we are. And same thing, it's been in a buy for 2 full days now. Where's that line at? I put that line in there yesterday. And I saved it. I don't understand how that does that. There. Oh, this is a dollar. We didn't put the line in there yesterday for the dollar. We did it for the euro. Save workspace. There you go. So let's go over to the euro Turkish lira. I bet it's a 3 days into it now. Right there. And the line is probably in there. Yeah, there it is. So there it is. 3 days into the buy there. That's that classic location, location, location. There's some really good trading between the European Union and the Turkish lira. There it is there. Is there any bond Bible I can read? That's a good question. Bond market is pretty hidden. They're not real. You know, they do such a. I don't even know how to call it. I want to call it, in my heart, I want to call it stealing or criminal, but it's all legitimate. You know, it all comes down to what the problem is. It's an over-the-counter market. I don't know if there's anything out there that really writes about it. Like I said, when I was with a hedge fund, I was in the hedge fund industry. I would sit in the bond room just because of that. You know, where the bond traders were. It was fun to watch them. It was fun to watch them. So, you know, I don't know if there's anything you can really read. You know, what's funny is you can find a bunch of schlugs right telling you how we can teach you how to trade stocks and how we can teach you how to trade currencies and how to teach you to trade futures. But you don't find anybody running around telling you how to trade bonds. You probably heard more from me just now, and you'll find in a whole year out there on the web. Yeah, so see, is there any bond? I don't know if there is. You know, like I said, it's an over-the-counter market, and it's kept in the back offices of the brokerage houses, and that's where they make good money. So, why do you think they get those giant bonuses? You ever hear those? You always hear from the brokerage houses where people are getting these big giant bonuses. Where do you think they're coming from? That's where they're coming from. You know, I mean, the stock trading desks are almost non-existent now. You know, the currency desks are almost as bad. There's more currency desk trading than there is stock trading in the institutions now. But they're both down dramatically in volume. But when it comes to volume of bonds, they're trading more bonds than they've ever traded in the history of the world. And that's where a lot of that's where all those profits are coming from. Is there any bond? To understand text and market, let's see, a lot of them. Let's see, a lot of them. A lot of what? A lot of bonds. There's, like I said, it's the biggest market in the world. It makes the currency market look small, and it makes the oil market look teeny, like microscopic. It makes the stock market look non-existent. That's how big the bond market is. Bonds literature. I don't think anybody really writes about it. very few of us have had an opportunity to be part of the that very hidden universe. Yeah, I don't know. Let's Google it. That'd be interesting. Let's Google something and see what it says. But more than likely, I don't think there's anything out there about bonds except for the fact of probably telling you, AAA, let's see, AAA plus. I don't think that, back in the 50s, I wonder how, I think there's only, let me tell you some strange numbers out there. Like AAA plus, there's a law, there's laws, there's rules about who can trade bonds. Bank trust departments versus brokerage houses versus, certain things, certain companies. And AAA bonds, AAA corporate bonds are like the best corporate bond to trade. They call them AAA plus. AAA plus bonds, corporate bonds. And I think there's only, to be dead serious, I don't think there's more than a dozen companies that have AAA plus bonds on the planet anymore. There used to be, tons of them. Find AAA corporate bonds. Browse corporate AAA. Google corporate capital AAA plus bond. AAA, okay, here we go. All the way down a little bit, it says AAA bond rating. What is it? It'll give, what is a AAA bond rating? Definition example. A AAA bond rating is the highest rating bond agencies award to an investment considered to have a low risk of default, thereby making the most creditworthy. The last I looked, I'm dead serious. There's only like about 5 or 6 companies now on the planet that have AAA bond rated. AAA bonds belong to a broader category of bonds known as investment grade. I'm dead serious. I think there's only like, it could be as low as 5 on the planet. No, back 40 years ago, there might have been dozens upon dozens, like a General Motors and an IBM and a Ford and all the major corporations like in the Dow Jones Industrial Average, and now pretty much they've gotten beaten up. Matter of fact, I'm going to do this. I'm going to Google list of AAA bonds, and I think they're only going to come up a couple companies. Wide range of products, fixed income. Find AAA corporate bonds. Let's see what it says here. Moody's. Moody's will list. You go Google Moody's, and they'll probably tell you what corporate bonds are rated AAA. Let's see, who are they? Let's see. I just had to answer something there. 11 best corporate bond funds, 36 best corporate bond mutual funds, company bond ratings. Like I said, I don't. 2 U.S. companies are rated AAA in the United States. That's it. Just 2. Just 2. Let's see who they are. Does it matter if the U.S. regains its AAA bond rating? Let's see. 2011. Here's the story says in 2011, Standard & Poor's downgraded the United States credit AAA. Okay, blah blah blah. This is Germany. In fact, it's giving the U.S. a lower rating at the time than Canada, Germany, and the United Kingdom. In fact, 2 U.S.-based companies had a higher credit rating than the country itself. Microsoft and Johnson & Johnson. That was back in 2011. I understand back a little bit before that, General Electric had a AAA. But I would say, see, the fact that the U.S. has no longer afforded the highest ranking. Yeah, it was during Obama. Mr. Obama did something and knocked our credit rating down to double A or something like that, double A plus. So, um, so basically, the best thing you can do is you can read about the few rating agencies: Moody's, Standard and Poor's, and Moody's. Did I say Moody's? Moody's, Standard and Poor's, and there's a third one. And then they'll have a list of the ratings of the companies, and you can see their rating. And then you could go and look, and it'll explain who can own those bonds. In other words, can banks buy those bonds, or can mutual funds buy those bonds, or retirement funds can buy those bonds. That's how that all works, and that's the way it works there. But you're really dealing with the Wild West. It is truly the Wild West. And the best you can do is probably find just explanations of what a bond is, and then you can go to these rating agencies, and they'll tell you what bonds are rated. But to find so that is pretty much the name of the game there. But like I said, if I had the knowledge I have now, you know how everybody goes, if you had this knowledge, what would you do if you were like 40 years younger? I think in the end result is that, without a doubt, the bond brokerage size, like I went into the option universe, which was fine. I'm happy, very glad that I did, and and I don't complain about it at all. But if I was recommending anybody, I would say go into the options universe, and at the same time go into the bond universe, because boy, you'll make more money than your local god. Honestly, there's so much money in it, but it's very hard to get into. That's the thing, is that not many people are going to just welcome you through the door as a bond trader. They're not going to say, okay, yeah, we're going to give you that $300,000 a year, with bonus. I'm sure it's a coveted job that you have to literally beg for. You literally have to probably kill somebody or two, probably a few people. All right. Where do we go from here? Oh, that's right. We were just looking at the euro and the Turkish lira right there. Canadian. Let's check out Canadian. But I guess we'll label this webinar about bonds today. The secret world of bonds. That's pretty much what it comes down to. Look at all those OKs you're sending me. I guess I've satisfied some of your questions. Standard & Poor's, Moody's, and there's a third one. Best? I think it's Best. B-E-S-T, maybe? Something like that. Bond rating agencies. And I can explain more about it if you read more about it, because then I can answer more questions about it. That's probably the better way to go. For you to get comfortable of the ratings and the rating agencies, and then the difference between corporate bonds and government bonds, then bills, government bills versus bonds. Bills are like up to 7 years. So, matter of fact, up to 10 year to some extent. Oh, no, that's notes. So you go bills, notes, and bonds, and they commingle sometimes. And it's the way they deliver and the way they pay coupons and so forth. So, yeah, it's not going to be that complicated. It's all up there when you Google it. They're not going to tell you about the nitty-gritty execution of it. Only people like myself who've been up to the highest levels of trading. I guess I've been at the highest level of trading you can go. I guess that's the best way to describe it. I've been to the highest level of physical trading you can go in the known world. Cowboy book. Happy trails to you. Yeah, really. It is. It's a guy, and we use a lot of old cowboy analogies, like gunslinger, shooter. What else do we use? We use a couple more things. Let me think. Shooter means that you're willing to gamble. You're like you're out there just trading anything and everything. Just trying to get buy it and sell, buy it and sell. That's a shooter. Just trading anything and everything without thinking. And then there's like a gunslinger, which means that you're even worse. You're you don't even think, you just do it, and you're taking enormous risk. And then let's see. I think there's one or two other expressions, I forget. But anyway, uh, yeah, you really opened the doorway to Pandora's box of hidden trading bonds. What a marketplace. All right, where are we at? Let's go to Canadian now. See what the Canadians are doing. And there it is, dollar CAD. And let's see what's going on there. Right there. And it's trying to perk up again. Look at that, showing some strength. And it looks like today is Friday. It looks like they're trying to throw it into the weekly buy. It seems to be bouncing almost to the 50 percentile, to the 100 percentile, back to the 50 percentile, to the 100 percentile, back and forth. The range, they're having a problem. I noticed that the Swiss and the Euro and all these pairs trades are really trapped in the 50 percentile range, between 100 and 50 percentile. They don't seem to be able to go further. They seem to be trapped in there. Let's see. From there, due to the fact we're seeing firmness, normally we would assume oil would be going down in value, but I don't believe it is. Let me just throw it up on the, which one should we leave? Let's leave the Canadian up on the J4X, and let's go take a look at oil. Oh yeah, let's talk about the bond. There's the bond real quick. Here's the last on the bonds. When we first started the conversation, bonds were trading at 155 and 3/32 bid. Now they just were trading at 12/32 bid. So there's some action in there, lots of action. Even for as smaller, it falls to 10. So we've dropped from 12 to 10. It's like there's some good action in the bond market. There always is. Bonds are, like I said, they're a wild and woolly world. 9. Look at that. So it's been a 3-tick market. There's, it's backing off a little bit there. So, and that's cool. All right, now let's go take a look at oil. And there is the front month, and it's banging through the 91, almost $92. And I don't know why Canadian is doing this issue thing of going up again here, but it is. It's trying to go up in value, not. It's losing value against the dollar. Normally, it's the other way around. When oil takes off like this, usually the Canadian goes down. But we're not seeing that here today. Now let's go take a look at gold real quick. And I believe gold was moving up too, I noticed. Yeah, see, gold is moving up and went into the daily buy yesterday. Boy, it was all over the sloppiness going into the closes too. But look at the weekly. The weekly doesn't want to get out of its own way right now. Maybe by the end of the day, but we'll see. And then, since we're kind of late into this, let's show you what silver is doing. Here's silver. And move that over and climb back up again. Now, it went into the sell yesterday. I don't know what that's all about. They've changed the offer there, but I think that's wrong. Let me just double check what yesterday's close was. We will do that right now. Click-diddy-doo-dah. There it is right there. What am I looking for? Oh, yeah, silver. So let's take a look at silver. So yesterday, silver closed at, what do they have? They have a settlement of 21.98. No, that's not it. 22.37. 22.37. No, it's the same close. Okay. All right. So I think the high is wrong. The high was 22.66, and they're showing it as 22.53. So there's some numbers that have been shifted out of it. We'll have to fix that. But it went into the sell yesterday. It looks like it's climbing into the buy today. So let me just show you what we sent out even this morning. Where's it at? About 3 hours ago. Where are you, silver? Come on, jump out at me. There it is. Yeah, see, that was correct this morning. The data was in there was correct, and so it's moving up now. So there's a good chance that this thing's trying to battle its way into the buy. We'll see. We'll see by the end of the day there. And what else can we say about that? And so, oh, let's go back to that. Let's go back to the metals complex. Let's see what copper's doing too. Where's that mouse at? Because we're coming to the end of the webinar here at the same time. There's the copper. Copper's holding up, so it's been in the buy for, this is the 4th day, and it's been in the weekly buy now for 6 full weeks. But we'll have to fix that silver. That silver is not representing what's going on there. And so that's the action we're seeing over in the metals complex. Let's take a look at the oils. There was the front month, and it's trading at 90. Where's it at now? It's at 92.99. So let's see if we can fix that so you can see it. Style. It should update. Why is it not updating? I don't know. Why aren't we seeing that? Oh, okay, there we go. Cancel. So right there, yeah, you can see it. 91.89, 91.98 bid offered at 92. There's 92.01s, 92.02. Let's go over to J4X. We'll put up the oil there. This is light sweet crude. Now they're back to evens are trading. Same thing on Chicago Quant. See 96 is a bid for it. There's a 98 bid. There's 95. Let's see, it's moving down. J4X looks like it might be ahead by a little bit. There's a 96 bid. It's 94 bid on J4X. Let's see if it pops up again. Evens are basically offered. Now we got a 98, 97. It seems like it's moving down in here. J4X seems to be a little bit ahead by a few seconds here. There was 95 bids for us. That's basically where, oh, look at it. Yeah. So that's where J4X is at the moment. Let's see. Let's see what Brent's doing. Brent is, wow, 92.76. So it's really tightening up the market between Brent and U.S. markets. So they're really reaching for this stuff. Let's see what our back month is doing. Here's the June contract here in the States. 86, almost 87. So we're seeing some real good action in there. Let's see. Thank you for your cowboy bond explanations, Doc. You have a great weekend, too. Have a safe and smart one there. All right, where else are we left off with? We got about a minute or two we could do. Anybody have any other questions? If not, we're going to get out of here. And everybody have a safe and smart weekend. And we will catch you all on Monday. What else? What have we missed? Oh, let's see what the South African Rand is doing. Let's see what they're doing with that. That should be heading down. Normally it is when gold is going up like that. So let's see what they're doing with South African Rand right there. It's not. It's trying to lift up. What is this? I swear, fundamentals seem to have gone out the door altogether. So, bye-bye for now. Let's see. So, anyway, we're out of here, traders. Happy trails to you until we meet again. Happy trails to you, to all our trading friends. All right, traders, catch you on Monday. TGIM. Doing the Biden whisper. Yes.